Hello everyone, I welcome you all again in our next chapter of understanding the concept of candlesticks. We'll continue our discussion on the single candlestick patterns. In the previous chapter, we covered about three single candlestick pattern, and we'll continue our discussion with more candlestick patterns in this chapter. So the next pattern we'll be talking about is the concept of the hammer candlestick pattern. Now this again is a single candlestick pattern, and it is a very bullish formation in the market. Generally, after the formation of this candle, we see a bullish trend in the market, and the trend is expected to last over a period of time. The body to wick ratio is the most important criteria while understanding the concept of hammer. When I say body to wick ratio, supposedly if the size of candle is say 30 units, then a body to wick ratio is 2:1 in this kind of candle formation, which means the length of the wick or the shadow has to be 20 units and the size of the body cannot be more than 10 units. That is how the body to wick ratio works in the formation of hammer. The color of the candle does not hold much significance as long as the body to wick ratio is met. As long as the ratio of 2:1 is met on the size of the candle, the color of the candle, be it green or red, doesn't hold much significance in the formation of the hammer. And generally, this candle leads to a start of new momentum in the market. When I say new momentum, what I'm trying to say is this: if the previous or the prior momentum is say bearish by nature, after the formation of this pattern, we see a bullish trend coming in the market, and we see a trend reversal in the market. Now, this is a simple example of the hammer formation. The share under consideration here is the Kotak Bank share, and it is a hammer formation. If you see the circle at the bottom of your screen, the prior trend was on the bearish side to a sideways market. We saw continuous happening of red candle, green candle, red candle, but the overall trend was bearish by nature. But once the formation of the hammer pattern happened, that is, the body to shadow criteria was met and the length of the candle was sizable enough, we saw the next day being green, and we saw a trend reversal happening in the market. And after the formation of this candle, the market gave you a return of nearly 10 to 12% on the market. So this is the power of the hammer pattern, and once the pattern is formed, it generally gives you a very decent trade in the market. Now, what are the characteristics of a hammer pattern? It generally gives a bullish or long trade, as I've already mentioned or explained in the previous example. The execution time of trade depends on the risk appetite. Now, this is a very important factor to see here. A risk taker or a guy who likes taking risky trades would execute the trade on the same day and the formation of the hammer candle. If you look at the right hand side of the screen, there's a circle being drawn. A risk taker would take a trade on the formation of this hammer day itself. But a risk-averse trader would wait for the formation of the hammer and would take or execute the trade on the next day. That is, he'll enter the trade on this candle. So those are two differences between a risk-taking trader and a risk-averse trader while taking a trade by using the hammer pattern. And the stop loss for this trade is generally below the low of the hammer candle. Be it a risk-averse trader or a risk-taking trader, the stop loss for this trade is below the shadow of the formation of the hammer candle. That is the stop loss, and we just ride the wave as and when the formation keeps continue and growing. Now, the next pattern of single candlestick we'll be talking about is the hanging man pattern. Now, this again is a very classical pattern, and once the formation of pattern happens, it generally gives you a sell signal in the market. And the prior trend is the most important criteria at the formation of hanging man. In this trend or in this kind of formation, the prior trend is always bullish. We see a series of new highs happening in the market, and the market looks like continuing the momentum and gain more in the market. This pattern also is sometimes called as the top formation or a top reversal pattern. What it means is that there's a bullish trend in the market, but once the formation of this hanging man pattern happens, we see a reversal in the market and the top of the market is in place. Generally signals a selling pressure in the market, and even this pattern is fulfilled when the body to wick ratio of 1:2 is met. That is, the size of the body is one part and the size of the shadow or the wick is the two part of the candle. The candle here is composed of a very small body. Because of the ratio being a factor here, the body of the candle will always be comparatively much smaller than the shadow of the candle. This is a classic example of hanging man. These are the shares of Maruti, and if you see, the prior trend on the left hand side of the screen was continuously bullish, and we saw new highs and new high being formed every day. But once the formation of hanging man happened, and we saw lower high formation happening, and we saw a continuous bearish reversal in the market, and the trend gave you a nearly return of about 6 to 8% on this share. So this is how strong the pattern is, even though the prior momentum was amazingly bullish. But once the formation of this pattern happened, we saw selling pressure coming in the market, and the market started making new lows. The next important single candlestick pattern we're talking about is the shooting star. And as the saying goes, save the best for the last. This is one of my favorite and the most classical pattern of trading in the market. It basically gives you a very concrete and a very perfect trade in the market. The shooting star just looks like an inverted hammer. If you remember the hammer pattern had a body on the top of the candle and the wick at the bottom of the candle. Similarly, in the shooting star pattern, the wick or the shadow is on the top of the candle and the body is at the bottom of the candle. It generally means that the sellers are having a higher sale on that particular day and they are trying to exhaust the bullish momentum in the market. It gives a very strong trend reversal, that is, the market is expected to reverse from its bullish strength in the market. And what are the characteristics of a shooting star? Basically the size of the candle. The first being, again, the body to wick ratio of 2:1 is very important. The size of the wick is always more than the body, and it generally is twice the size of the body. It's a bearish reversal pattern, as I've already mentioned that the prior trend is bullish, but once the formation of shooting star happens, we see a bearish trend coming in the market. And this pattern catches all the bulls off guard. Now what I mean by that, prior to the formation of this pattern, the bulls are of the view that the market is continuously going to make new highs, and it does. And once this formation happens, the bulls start to panic. They start to exit their position and fresh short start position coming in the market, and which is where we see bulls unwind the position and we see a quick fall in the market. And the best way to trade this kind of pattern is through bias free, because this pattern sometimes can give you false signals. So you have to be bias free and always have a stop loss for the short trade in the market which you've executed. Now, thank you for your patient hearing. In the next chapter, we'll be starting our discussion on the multi-candlestick pattern. That's it for us on the single candlestick pattern. I hope it gave you decent information. In the next chapter, we'll be talking about multi-candlestick pattern. Thank you so much.